Good morning, everybody. Happy Tuesday. Hey, gang. Happy Tuesday, everybody. Hope everybody's doing great. Um, Camera should go on in a second. You should be able to see me. There's like a 8 second delay or something like that with YouTube, but it is what it is. All right. Hopefully you guys could hear me okay. Hopefully you guys could see me okay. And let's get into it. Good morning. We got James, Cheese Grate Trader. We got JB. We got C. Fazio. We got Arnulfo here. Good morning, Arnulfo. Good morning, Kevin. Good morning, Robert. Good morning, Brian, Richard, Delroy, John. We got two Johns. We got John Berg, John Short, Penny. Hey, Penny. Good to see you here. Penny, I don't know if you were here yesterday, but I was just letting everybody know that we're looking for dates right now to do another live seminar here. I told them to somewhere January, February, so they're going to look at dates. As soon as I have dates, I'll let everybody know. And it's going to be bigger than last time. Last time, I think we had about 70 or 80 people here, and we filled up the entire room. This time, we're going to need a much bigger room because we're going to have more people. But I just thought I'd let you guys know that I'm looking for dates. As soon as I have the dates from Sean and Amanda, I will let you know so you guys can start planning for it. And for anybody who can't attend, it'll be broadcast on Zoom. This is for VIP members. This is for people who have platinum, diamond, basically all of my programs. But yesterday we sold like 10 or 12. I mean, you guys have been buying my programs like hotcakes, so I really appreciate it. So I want to do something nice for you, so I'm going to have a live class. Vernon, Sergey, David, Richard Jr., Flying Ronan, Deborah, Dave, Soler, Bill, hey Bill, Chad, Ivano from Italy. How are you, buddy? Thomas, Sassy Trainer, David, Robert, Illinois Grain Farmer, Jill's in the house. Hey Jill. We got Stan, we got Warren, we got Walt, we have Deanna, we have Dave, we have another Dave. We got a lot of Daves here. We got Wade. Hey Wade. We got David, we got Dave, we got Tom, we got Henry, we got Genevieve, John, Steve, Moondog is in the house. Mr. Panda Man. Hey, Mr. Panda Man. Good to see you. I don't think I've seen you here before. And if you guys see somebody spamming, please tell me. I'll boot them faster than you could say who's your daddy. We got Piet de Brock from the Netherlands. We got Wesley. Good morning. Good morning, Wesley. Eduardo. We got Randy. We got Harold. Hey, Harold. Seth. Jeff. Good morning, Jeff. Krish. Jody. Hey, Jody. Steven. Ray. Rachel. Peanuts is here. Javad. Rudolfo. Hey, Rudolfo. We got Jay Blazer. We got Lydia. We got Romel. We got Kevin. We got Kirk. Jesse. Vertuvian. Justin. Just Jen. Myron. Mark. Naples fan. Hey, Naples fan. Good to see you. James. Matt. Charlie. Clyde is here. Ralph. Bob. Hey, Bob. Good to see you. Kay's here. Al is here. Kevin. Duzzy. Nathan. Good morning, Nathan. Michelle, David, War Dog is in the house. Jean is here. Cam, hey Cam, good morning. Good morning, Cam. We got a lot of people here. That's what we got. We got Art, Henry, Rice, Alan, Rihanna, Kathleen, Tom, Frank, A.G. Cooper, Stefan, Peter. Good morning, Peter. Julian. We got Lewis, K. Lopez, is that Pate Moster, if I got it correctly. Mike, Ira, William from South Florida. William, we got two Williams actually. We got William K and William Schumacher. We got Don, we got JB. Good morning, everybody. Eagle Beagle's here. Eagle, I was thinking about you this morning. I was thinking about you in global markets, and I was actually going to ask you well, we'll get to it in a minute, but something you and I talk about all the time is in play today. So we'll talk about that in a minute. Glad to see you here, Eagle Beagle. And I hope Mom is doing okay. Avalon is here, JB's here, Don is here. We got a lot of people here. That's what we got. So the first thing I'd like to tell you is nothing relating to trading. It's relating to watching this. Please, 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 the Gearbox. Rodolfo, is there a room for us to meet where I can bounce ideas from each other? This room and the VIP room. Rodolfo, VIP room. The VIP room at noon, I usually leave the chat open so you guys can chat for an hour amongst each other. And I leave the chat open here so you guys can chat amongst each other. You can also send me an email, Rodolfo, at roger@rogerscott.com. Roger@rogerscott.com. So when you guys are here, please go to the gearbox right here, the gearbox, and hit 1080p. You'll be able to see me much, much clearer, I promise you. Now, a lot of times it'll just take you to auto. Don't trust auto unless you have a hyper fast Ethernet. Make sure you're watching at 1080p. 1080p. Even it gets me sometimes too. So 1080p right here, quality 1080p. And if you're there, please, and Rodolfo, you could send me an email anytime you want. Uh, Please hit the thumbs up button one time, just one time, okay? You got over 20,000. Yeah, there's a lot of people who come in here. Over 20,000 people, yes. We do have about 14 to 1,500 people a day watching this video every single day. So real quick, the last thing I want to tell you before we start is VIP room today. That's what I was just telling Rodolfo about. Rodolfo, here's a link. And you can chit chat with folks. Folks have become friends here. I mean, we have people who came to the live class, exchange phone numbers. They have their own email, they got their own stuff going on. So here's the link to my VIP room. Let me tell you what I'm going to be talking today in the VIP room. What is institutional seasonality? How to confirm institutional seasonality? Why relying on seasonality alone is a huge mistake? How to combine seasonality with technical analysis? Why seasonality is more important during earnings season than ever before? How seasonality can help tilt the odds for time spreads? Yes, for time spreads. What additions I'm planning on putting into Data Miner and why they're important to you, whether you have Data Miner or not. And top stocks to see whether they're hitting seasonality right now. That's what we're going to be talking about today. Pretty good, right? So does everybody like that agenda? There's the link right here. Here's the link. And also, folks, don't forget, Customer Service Live. I teach you things. You get frustrated. You go to Customer Service Live so they can help unfrustrate you. Here's the link for that. The Cam and Gustavo show. If you have a question, they have an answer. I remember when I was a kid, I used to ride to work with my dad. We used to have this radio station, KFWB in Los Angeles, News 98. It'd be like, if you give us 20 minutes, we'll give you the world. So my spiel is, if you give Cam and Gustavo 20 minutes, they'll unfrustrate you. Okay. All right. So the first things first, before I get into all of this, I wanted to show you guys something. Today, by the way, one of the big catalysts is going to be the CPI report. I just wanted to show you something real quick here. I'm going to post this in the Telegram channel for you all, okay? In the main Telegram channel so that you can look at it over the next 21 minutes, okay? Here, notice what I just posted for you in the Telegram channel. If you're not in the free Telegram channel, it's time for you to get into the free Telegram channel. That's one. Give us 22 minutes. We'll give you the world. There you go, Ira. Yeah, KFWB News 98. Give Cam and Gustavo 20 minutes. They'll open up the world for you. So I wanted to show you this. This is the report that's coming out right here at 8:30. Okay, hold on. This report's coming out. What I am looking at is this number right here. And I am looking at this number right here. Now, here, the problem here is you see how last year, 2.7, now it's 2.8, that's inflationary. 2.93, that's inflationary. The problem is it's already priced in. So if this number is worse than 3, basically the report is priced in to show that inflation is worse than it was a year ago. Yes, I know that our president keeps telling you that we're in the best economy ever, but here's the fact. 2.9 last year, they're expecting 3. X food and energy, and if you're looking at food and energy, it's 2.7 versus 2.8. I'm hoping the number is 2.7, and I'm hoping this number is 2.9. Otherwise, we have an inflationary problem. Now, here is what the numbers on the Wall Street are. And I posted this for you in the chat. Good morning, Krisha, Duzzy, Eagle Beagle. Yep, CPI is holding up the show. Candy, good morning, everybody. Becky, good morning. Hi, Harry, Tamara, John, Peter, good morning, everybody. Good morning. Omar, Debbie, good morning, everybody. And Angie, good morning, Angie. So this is the bets. They're taking bets. 5% that the core PPI prints above 0.40, 25% that it prints between 3.5 and 4.0, 35. And here's the odds, okay? I'm somewhere right here, a little unchanged or gain as much as 0.75. I'm right here somewhere, right here. Okay. Right in the middle. So we'll see what happens, but these are the odds. I posted it for you right now in the Telegram channel. If you have the main Telegram channel, we got 6,304 people in there. Let's see, how many does Graham have? Graham has 4,400. Lance has 2,267. Looks like I have the most. Plus, I have 3 Telegram channels. 63. Yeah. Yeah. Anyway, I don't know. I never look at those numbers till now. But anyways, here's the main it's right here for you, okay? And this is what we're looking at right here. So that's going to come out in a little while. Okay, what are the small cap stocks that Uncle Roger is looking at today? Let me give them to you right now. I'm looking at 3 stocks today. Now remember the rules. And if you break the rules, don't blame me for getting into losers. His new commission of labor will fix those numbers. That's funny. That's funny. So the 3 stocks that I'm looking at, what are the 3 stocks? X4. I'm looking at this stock during the regular session, not pre-market. During the regular session, I'm looking for this stock. I'm looking for an entry around 230, which would be above the 50-day moving average. It would be way above this price area, above all of this noise right here, okay? XFOR, entry at 230 or higher. ATNF. I like this stock right here. This stock right here, this one looks pretty good actually. Right above 670, like right here. During regular market hours, not pre-open. Don't go buying it pre-open. Don't do that. That's not part of this game. After market opens. And then my last one, which I think I like the most, is Gevo. I like this Gevo a lot. And you 210 on Gevo, 210 on Gevo after the market opens. So again, X4 above 230 during regular market hours, ATNF above 675 during regular market hours. And this one, which I like the best, actually, Gevo, I like this one the best, above 210 right here during regular market hours. If you send me an email, which I haven't got one yet, but if you send me an email saying, what happened? Why is I bought my stock at 815 and it's going down, I'm going to say, please next time follow directions, and that won't happen, okay? After market hours. They are not in play before market hours. We want to see if traders pick up on these levels after market hours. Very, very important. Okay. Thank you, Bob. Oh, we're doing good. Only 14 minutes. Okay. And yes, please give us a thumbs up if you guys don't mind. If this is helpful to you, don't give me thumbs up if this is not helpful to you. Okay. What are the catalysts for today? Can somebody tell us what are the catalysts for today? We don't have that many. Can anybody tell me what are the catalysts for today? Eagle Beagle, today is your day to shine. Can anybody tell us what the catalysts are for today? Ivano says CPI. Ivano, when you see 2 stocks in the same sector, just say chip stocks. Just say chips. You don't have to itemize them. CPI, tariffs, China, yeah, for sure. Chips, consumer. Well, it seems like Richard got all of them. Actually, Richard Del Mosto, you got all of them except for one. You guys missed a big one. I don't expect anyone to get it. Only maybe Eagle Beagle because he's focused on that market a lot. So we got the China, the China, the tariffs is like tariffs. Just say tariffs. Uh, CPI, chip stocks, consumer discretionary. So those options are regular. I don't know what you're asking me, Avalon. Uh, Pharma, no, I don't see pharma being a catalyst right now. Tariff, CPI, Fed speakers, yes, Fed speakers. I got that too. Okay, yes, Angie. Oh my goodness, Angie got it right. You're not going to spam today, G boss. Okay, if you're not going to spam, I'm not going to kick you out. Just don't spam, please. My job here. The last thing I want to do is kick you out of here, G boss. No, no, no. Energy is not in. Is not in. But Fed speakers for sure. Well, I don't even know what I'm saying this for. Angie spilled the beans. Eagle Beagle. I thought you were gonna say Japan because you're always focused on the global economy. Why Japan? Because they're making an all-time high in their stock market. So CPI, chips, consumer discretionary, Fed speakers, and Japan. And I have them right here, right there. They're all itemized, so I don't cheat. CPI, chips, consumer discretionary, Fed speakers, Japan. Right there. Right there. You could see it right there. All day. So that's all there. So Japan. Why Japan? Why Japan? I'll show you why Japan. Let me show you this. Hitting an all-time high. All-time high. All-time high. As relief over US tariffs continue to fuel optimism. That's a catalyst right there, folks. Technology led gains on Tuesday, hitting an all-time high. That's a catalyst. That's a nice global catalyst to have. Okay. Steve, I did not see that. If CAH has earnings this morning, then you are correct. This is what I'm saying. I miss it sometimes. So let's take a look. Let's take a look. You may be right. And again, I'm not pretending to be the man that knows everything. And he's right. He is right. I missed it. Pharma. I thought you meant pharma. So when somebody said pharma a few minutes ago, I thought you guys were talking about the whole pharma the regulatory stuff. But he's right. He's right. I'm going to add that to my list. He's right. This is a major healthcare stock, and it is down. So yes, you see, I don't pretend to know everything. Uh, yeah, EMJ would be it. That is right, Angie. That is right. Avalon says the trades can give me a little one info. Remember the very near to all of this. The trades, can you give me a little, or I'm going to give the trades. I'll talk about the trades. But you're right, Steve. Thank you. Thank you, Steven. Thank you for being a great contributor. I appreciate it. Thank you. Thank you. Thank you. Thank you. I do appreciate it. You're right. Tonight we have SE. This is a South Pacific e-commerce company. Stanley Druckenmiller was in love with this company about 8 years ago. That's how I learned about it. It's not a really great, I mean, it's not a huge stock. It's not going to be a catalyst, but it's something I watch all the time because I know institutions love this stock. And then tomorrow we have Cisco. I don't know if Cisco comes out before or after the opening, but Cisco's definitely a catalyst. Japan closed all-time high. Doesn't that mean that the market has traded it? No, Dave, the market hasn't had a chance to trade it. The U.S. market has not traded since it happened. It happened overnight. Now the U.S. market is going to react to it. You see? There you go. Good catch. Good catch. All right. Well, I'm about to talk about that, Cam, right now, actually. So, and by the way, hit me up. I'm going to put on bonds here on my TC 2000 just to see what's going on. But as of right now, I don't like what I'm seeing because this increases yield. See double top right here? We got a double top, high volume high right here, resisting this area right there. Okay. So we definitely, I don't like this. This increases yield. Okay. What we want to see today is we want bonds to go up. That would decrease yield. It's been just going straight down, and it's been going straight down since about midnight. Straight down, which is not great. Okay. Thank you, Naples fan. I appreciate it. Yes, during regular market hours. Yeah, it is fintech, Ray. It's an e-commerce site. It is in fintech. That is fintech. Okay. So the bond market is not giving us anything pretty here. Also, remember I drew this chart for you? It's the same thing we were just looking at, but remember this channel? Look where we are right now. We are out of that channel. And look what happened when we hit the 200-day moving average. Okay? So not really nothing really great there. Couldn't get past the 200-day moving average. Double top, high volume resistance area right here, and now we're coming right back down. Okay? Coming right back down. Thank you, Joe. Thank you, Peanut. I appreciate it. Australian market is not nearly as big as Japan. Japan, China, and Europe. Those are the main markets. But thank you. I appreciate it. Hey, Kevin, good morning. Thank you, Bugs. I do appreciate it, though. Hey, can you guys let me know how Canada's doing? Usually when Australia is moving, Canada starts moving too. Okay? Something to keep in mind. Crude oil. Oh boy. Well, we're still just driving around the 200-day moving average. I think today's report can actually be pretty instrumental depending on where the bond market going. But so far, the crude oil has just been, I mean, just nothing, just lower end. I do want to say that if we break this area, there's really not much there till right here. So I would say that we're going to kind of more likely than not, we're going to trade in the near term. We're going to trade somewhere in this area, which would be between 64 and 70. Remember what I told you for my year-end forecast between 60 and 70? So there's just not much going on here right now, which is actually not the worst thing in the world. Deborah, a lot of these small cap stocks you can't buy with a regular broker because they're too small. You need a special brokerage for them. Not all of them, but some of them. All right. So not really much going on here on crude oil. What about US dollar? Well, the US dollar is respecting our uptrend, which means we're getting, just to give you guys a nice, real simpleton explanation, you see these black lines? As we go higher and we break above the 8-day moving average, it stabilizes the US dollar more. That means we're getting closer to certainty with tariffs. Okay. At least how this is perceived right now. Okay. Let me just really quickly. Okay. Sometimes it's easier to just show you this without all those lines. See how we're marching up right now? These are the levels we need to break. The next level is 98.67. One of the things that this is negative for is as the US dollar goes higher, and I think it's going to make another swing high and start coming up here and traverse all the way up here. But the higher the odds that this thing traverses, okay, and moves up, the worse it is for the gold market. The worse it is for the gold market because US dollar becoming higher, and the worse it is for international investors who want to buy US stocks on the down low, on the cheap. Okay? So just FYI, we do have this channel right here. We do have this channel here. So right now we're traversing this channel. Gold. I'm not bearish on gold. I know gold is there's some news headlines. We couldn't get above this level, but I'm neutral on gold right now. I think there's way too much nonsense right now, way too much nonsense in the world to think that gold is just going to go down. I'm personally believing that gold is just going to consolidate and just continue doing what it's been doing. If you look at the weekly, see how weekly it's just consolidating, but it's still staying up here? It doesn't really have a lot of directional bias right now. So I would be very cautious closing up gold, and I'll tell you why. Because if the U.S. market takes a big hit, a lot of investors are going to shift their assets into gold. And if the US market takes a hit, that one of the reasons that could be is because US dollar is going up. So I would be cautious right now. I would be cautious right now liquidating your gold position. If you have gold, I would hold on to it for now. I wouldn't be so fast. I wouldn't be so fast to liquidate your gold position. Okay. I wouldn't be so fast. Now, I know we're getting a lot of people coming in here right now. So let me just tell you real quick. Today at noon, I've been working really hard to make those VIP rooms like the best thing since sliced bread. We brought Raleigh in. Cam, do you know if Raleigh's back today or if he's back tomorrow? I'm not sure if he's back today or tomorrow. And and uh and here's my agenda today for the VIP room. I think you guys are going to love it. We're going to talk about uh we're going to talk about what are we going to talk about? We're going to talk about what is institutional seasonality, how to confirm institutional seasonality, why relying on seasonality alone is the biggest mistake you will ever make. How to combine seasonality with technical analysis, why seasonality is more important during earnings season, how seasonality can help tilt the odds on time spreads. You guys love my time spreads, the calendar spreads. I'm going to explain to you the rules for time spreads and what I'm putting into Data Miner to help you with that. What additions I'm planning on putting into Data Miner next, top stocks to see whether they have seasonality right now. Okay? So, and again, those morning stocks are GEVO, GEVO, ATNF, ATNF, XFOR, XFOR. It's GEVO, GEVO. It's ATNF, ATNF, and XFOR. I'm going to type them for you guys just to make sure there's no mistakes. GEVO, ATNF, and X4. Okay, just to make sure there's no. I don't want to make sure that you guys don't make mistakes or whatnot. Okay. All right. And remember, I gave you something cool in the I gave you this thing in the for today's CPI report that's coming out in about 3 minutes. I'm trying to do everything humanly possible to help you guys become the best traders you could be. China is doing nothing, but it's not going down, which is a good thing. It's not going down. It's just consolidating. It's not really taking anything away from us. And Bitcoin is still looking bullish. I know it's down a little bit today, but I like this bar and we're still above the 8-day EMA. So I am still relatively bullish on Bitcoin and Bitcoin related assets. Okay. Is playing up today. That's okay, Deborah. It happens to everybody. And also, don't forget customer service line. Do you know how many times I get like AD? It happens all the time, Deborah. It happens all the time. Oh, sometimes I'll read something and folks will be like, what is he saying to us? By the way, if there's something here that's not clear, please feel free to send me an email, roger@rogerscott.com. But if you have a customer service, if you have a question about a stock or about something that I'm talking about here, please feel free to send me an email. But if you have a question about how to install AlphaZone Pro, why arrows are not coming up, how to input a debit spread, how to turn something on, I am the last guy you guys want to email, literally, because I'm going to send your email to customer service live. Sometimes when you guys send me questions, I have to ask Matt because I've completely given up my tech skills and I'm focusing on stocks. I'm focusing on what I'm good at so other people around me can pick up the slack and it's working out okay. So as of right now, the only thing I'm capable of doing is turning on a computer and opening my browser. And they like it that way. So we're going to stay with those rules and regulations, okay? Please don't ask me for customer service, for technical support. We've got over 100 people in the company who are better than me at it, okay? I mean that. I mean that. Yeah, Catalyst CPI report, tariff chip stocks, and Japan. That's right, Japan. Also, Cam, you forgot one. We have a couple of FET speakers today, which may be important. A couple of FET speakers today may be important. Okay. I didn't know that, Naples fan. Thanks for letting us know. Okay, well, it's 9:30. Let's see. Ooh, baby. Oh my. Look at this. Look at this. This is nice. Oh, this is nice. Yeah. Look at this, Jeff. I haven't even read the news yet, but this is very nice, very nice. I like what I'm seeing. Let's see if the market is cooperating. Oh, yeah. Oh, yeah. Here we go, baby. Let's see. The survey says I need to get Matt. Ooh. Oh, look, 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 look. It's better than the estimate. Yes, 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 yes. See, Trump and Powell can now say with a straight face that inflation is not getting worse. That let's look at the X and core and energy. I would love this number to be 2.9. Core is 3.1 and it's still moving like this? Wow. Yeah, they're gonna that they're happy. They're gonna lower rates. You see, sometimes bad news is good news. This means they're going to lower rates. That means they could say with a straight face that, hey, we really have a reason to lower rates. We really have a reason to lower rates. Think about this, guys. So employment report was a little wacky, right? And now X food and energy 3.1, according somebody just said that here. That's a number to lower rates. They're going to lower rates. They're gonna lower rates. I don't care about month to month. Nobody cares about month to month. Bugs, nobody cares about month to month. This is month to month is going to be revised 50 times, only year to year. These are the only things people care about. This is actually not bad because it's telling us inflation's not doing bad, but without food and energy, it's a little higher. And food and energy are the two biggest components. So this is actually going to work out in our favor. This is not a bad report, folks. Let me just look at the market. Look at the QQQ. This is not a bad report, folks. This is not a bad report. No, no, no. What it's saying is basically it's confirming that we need to lower rates. It's bad news is good news. Let me just quickly see how some of the stocks are doing. Yeah, it's not a bad report. This is not a bad report. This is a good report because this is telling us that they're for sure going to lower rates. All right? They're going to lower rates. Well, it's not that he's been right or wrong. It's John. Let me explain. Trump wanted the Fed to lower rates before getting concrete data that they need to lower rates. What Powell said was, we're not seeing enough evidence. Now he can say with a straight face that he is seeing the right evidence. Okay, so now he can say, hey, CPI is not cooling off as fast as we would like. Employment is weaker. X food and energy is still at 3.3. It was 2.9. We need to lower rates. We need to lower rates. Yeah. Yeah. So it's not that you need to understand something. It's not that the problem between, and again, I don't want to get political here, but this is actually a very interesting topic. Trump wanted him to lower rates before getting the data. Powell said, hey, we're not going to do that because if everything is moving in the right direction, we're not going to do that. Well, we now have evidence that things are not moving in the right direction. Interestingly enough, John, now here's the interesting thing. Please, let me just say this. Interestingly, the irony in all of this, if you recall, John, Trump was saying it like maybe for the last 2 months, right? Maybe for the last 6 weeks, 2 months. That's been the time. As soon as Trump started talking about it, Murphy's Law, as you know, never fails. The data started coming out really solid. So as soon as Trump started saying, we need to lower rates, we need to lower rates, we need to lower rates, the data started coming out really good. And Powell's like, we don't have enough information. We just don't have the data. Give us the data and we'll take action. Well, we have the data now. So it's not about Trump or Powell. Trump wanted Powell to take a guess on what was going to happen in the future. And Powell said, no, we're going to wait and see what's going to happen in the future. So it's not about who's right or wrong. It's about getting the data to make the decision. We didn't have that data. So now in the last week, the employment report was soft. Remember the revision? It was awful. And now we have really good evidence. Look at this. 2.9 versus 3.1. And you can even argue that Powell can even say that we're making progress, but it's not good enough. So everybody wins. Everybody's happy. Everybody wins. Okay? It's this is good. This is good. This is good. Yeah, exactly. Just the facts. And this is a fact. Now Powell can go and say with this, because look, how can Powell go and say, even though all the data is really good, we're going to lower rates because we think it's going to be bad? He can't do that. He can't do that. So I just wanted you guys to understand what the argument is, okay? And this is not really political. This is completely economic. But this is a good number. This is not a bad number. This is a reasonably good number. It's a reasonably good number. There's nothing wrong with this number. Let me just see something here. It's not good for gold, okay? Will lower rates cause drop in gold? Yes, it will. It will. It will. Potentially, potentially. Let's not get political here. Let's not get political. I really don't care what he knows, what he doesn't know. I just care about this. And yeah, this is very reliable data. This is very reliable data, Alexander. This is reliable data. This is very reliable data. This is almost guaranteeing we're going to lower rates. I mean, this is like a solidification that we're going to lower rates. Okay. All right. So let's break down everything now. This is good. This is good news, folks. This is not bad news. Nothing to be upset about. Nothing to be this is good. They're going to lower rates. Now Powell's going to say, "Okay, we waited. Things are not looking as great. We're going to lower rates." He can now say the CPI is just not making a progress as fast as we wanted to. Things are looking better, but they're not looking better fast enough. We've seen evidence that jobless claims are slowing down. We've seen evidence that inflation is still persistent. We're going to lower rates. That's all. Let's not get into nitty gritty. And by the way, it's not interest rates are not falling off. They're going to start getting lowered. Gold has plenty of room. Okay, got plenty of room. So don't go throwing gold out with the bathwater just yet. Gold is down 0.15. It's not really taking a big dump. But this is good. This is good for the market. This is very good for the market. This is good for for stocks, you know? Anyways, let's continue. I'm happy about this. This is good. This is good. Let's continue. Investors are refraining from making big bets ahead of US inflation data, which could reshape expectations for Federal Reserve cuts. It has reshaped expectations for Federal Reserve cuts. Trump signed an executive order delaying hefty tariffs on China. I'm not going to get sarcastic. You already know what I think about all of this. I'm not going to get into the tariffs. When this was announced, the market didn't even blip. The market did not even blip. Okay, so that is way priced into the market. Investors are cautioned that the extension of the trade truce can prolong uncertainty and make more persistent risk to inflation. Yeah, I mean, but I don't think so. I don't think so because Powell's not going to wait anymore. This was an excuse that Powell was using. This was the excuse that Powell was using. He doesn't have to worry about this. He can now just blame inflation. He doesn't have to blame the dot plot summary. See, here's the difference. Here's Powell. Here's Powell's position. Very important for you guys to understand this, okay? We don't know what will happen with interest rates. So far, things are okay. We don't know what's going to happen in the future. Look at him now. Things are not okay, and we still don't know what's going to happen in the future. So we're going to start lowering. You see the difference? Things are looking good, but we have uncertainty in the future because we don't have the tariff data. Now, we still don't have the tariff data, but things are not looking as healthy as they did before. So it's a different conversation. It's a different conversation. Okay. All right. Yeah, but the stock market hasn't dropped. Look at QQQ. Look at SPY. This is good for the market. I'm telling you, this is really good for the market. Okay, this gives market more certainty. This gives market more certainty that the Fed is going to take action. The odds of them taking action now are like 99.5%. Adobe, another stock that we need to keep an eye on is Adobe. That was a catalyst the other day. And look, it's in our top movers yesterday. Always important to see what the catalysts are. Today, we're looking at inflation data that's already passed. The report will provide an opportunity to assess the impact of tariffs on inflation amid a cooling labor market. We already know what it is. It's not having a good impact. They're going to have to lower rates. The subservice PMI showed unexpected increase in prices, paid subindex, serving as a reminder that inflation is still in force. Excuse me, I have hiccups. And today we got a confirmation of that. Jeff says dual mandate is in conflict, employment now in question, while inflation not showing up yet. It is a little bit, Jeff. It is. It is right here. A little bit right here. It is right there. And CPI hasn't gotten better in a year, and ex-food and energy has gotten worse. It is. It is. It actually is as of right now, ironically enough. We already have these numbers. A survey conducted revealed that only 18% of investors expect a risk-on market reaction, 43% a mixed, 39% foresee a risk-off reaction. Well, it seems like we're more in this ballpark here. There's now probably, I don't know what it is. If you guys have it in real time, I'd love to know what it is. I'd love to know what it is. But right now, I'd be willing to say we're at 94% that they're going to lower. They're going to lower rates in September. Tomorrow on the earnings front, I missed this. Thank you again. I think it was Steven or somebody else. I'm sorry if I missed it, but you're right. CAH. See, I missed this. I missed it. I was too focused on Circle and CE, but that is a catalyst. You are correct. China. Excuse me, Europe. Europe is flat. Everybody's waiting for, I guess Europe is waiting for this decision to see what happens today. We already know what happens. Energy and mining stocks, notice not technology stocks. Benchmarks were limited amid everybody waiting for the news that just came out right now. Investors are awaiting Friday's meeting between President Trump and Putin. Trump said on Monday that both Kyiv and Moscow would need to cede territory to end the war. What's his name? Zelensky said he will not seize any territory. I don't see this as benefiting anybody, but one of the good benefits is the markets will continue playing. We don't know what's going to happen till Friday, and that may actually lift sentiment because we don't know what's going to happen. But my personal belief, and I don't have any inside information, but my personal belief is this is not going to amount to anything. And I hope I'm wrong. Eagle Beagle, there you are. Did you hear? I don't know if you were here or not, but I was talking about Japan. Japan is making all-time highs, which is pretty impressive. Good morning, Ralph. Good to see you. You may want to put Microsoft on your watch list today too. Yeah. Yeah. Okay, let's continue. China closed higher today as the extension of the tariff truce between U.S. and China boosted sentiment. Trump signed executive order delaying tariffs. We already know that. The market, I don't think it even upticked for a second, whereas 2 months ago, the market would have gone crazy. And Japan hit an all-time high. Isn't it funny how Warren Buffett starts investing in Japan 2 years ago, and all of a sudden they hit 2.5 years ago, and all of a sudden they hit an all-time high? For 10 years, they didn't do anything. NVIDIA is definitely a catalyst. Intel, chips. When you see more than one, remember, we're trying to look for the bigger picture. You itemizing it isn't helpful. You putting them together into blocks. This is where the bigger picture is more important than isolating the individual stocks. So when I ask you for a catalyst and you see multiple stocks in the same category, remember, we're looking for that category to dump, not for each stock to dump. So we're looking for the bigger picture. So just say chip stocks. I mean, it's okay if you say NVIDIA and Intel, but I'm just trying to teach you that chips are in play today. Starbucks is in play today. And CAH, thank you for telling me I missed it. Okay, David says CME shows 90.8%. Okay. David, I wouldn't be surprised if by the end of the day, it was at 93 to 94. Okay. All right. So just FYI. All right, let's put everything together. Volatility, look, it's still near the lows. Volatility is near the lows. Volatility is near the lows. We're not jumping higher. We're down today. This is positive, and we're still near the lows. I think we are going to get some shakeup in volatility over the next 6 weeks. Meaning, in the next 6 weeks, I think we're going to go up to over 20 again. I think this is going to be a regular occurrence, and it usually happens. It usually happens every 4 weeks to 8 weeks. But you have a spike like this, and I'm expecting another one in the next 3 to 4 weeks. Because and the reason I expect more of them in the summer is because we have less liquidity. It's much easier to drive prices on these things, just like it is to drive prices on small caps. Oh, by the way, everything I tell you during this session does not apply to small caps because small caps are not driven by institutions. And everything I'm focused on here is institutions. That's why I talk about those small caps before we start our analysis. Small caps are driven by retail traders. Retail traders aren't following all this stuff. Okay. Which is another reason why you can't use small cap stocks with Pro Trader dashboard. It's because because relative strength versus the SPY on small cap stocks is about as useless as me trying to train Clyde to speak English. Okay. Listen to what I just said right now. Don't use small caps in Pro Trader dashboard. Don't apply all this Fed talk and all this stuff we're doing to small caps. They are on their own little island. They are driven by retail traders. Okay. All right. What about momentum? How's momentum looking right now? Well, let's see. Believe it or not, but we actually have Bitcoin, consumer discretionary. You got semiconductors, you got technology, you got QQQ, you got some tech starting to show up here. It's still very mixed, but we got technology. Or look a week ago where we were. Technology was over here. Consumer discretionary, Bitcoin, uh, or actually, hold on a second, not here. Like Wednesday of last week, semiconductors, Bitcoin, Thursday of last week, starting to come up. And now we're starting to see more upside. This should be pretty bullish for the market today, actually. Uh, this should be pretty bullish for the market today, if I had to guess. Okay. If I had to guess. It is, Michael. It is. It is. Did anybody take that bonus trade I gave you on Microsoft yesterday in the VIP room? I mean, in the pit? Let me know. Let me know. We'll see how it does today. And I gave you one in weekly cash flow. I gave you 2 Microsoft trades yesterday because I really liked Microsoft the other day. Okay. So volatility stable, stocks are stable. We don't have a lot of directional bias right now. We have a two-sided market. We don't have a big follow through. We don't have a lot of stocks breaking out. I'm hoping that'll change today, but we don't have. Oh, good, good, good. I'm glad to hear that. Good, good, good. Well, after you guys close it, maybe you could send me a nice email, okay? All right. Here's my email address, roger@rogerscott.com. All right. Good, 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 good. Making money is what I want to hear. That's what I want to hear. All right. So we don't have a lot of directional bias right now. We don't, which means, and I hate to say I told you so, but we're still in a choppy environment. This is really what the market's looking like right now. Yes, we may come up all the way up here, but we're still in this choppy environment. The market does not look like this. Okay. Although today it may help, the market does not look like this. That's the mega caps. The market looks a lot more like this, like this. Okay. Every time you look at the SPY, remind yourself that if you strip away the market cap, this is what you're left with. Now, I like this. I'm not unhappy about this. This is a good start, but there's way too much. Um, just to give you an example how bad it is right now. No, Ruth, you can't. Uh, just to give you an example of how bad it is right now, small cap stocks have the biggest discrepancy between large caps. And this is the institutions are selling small caps at the highest rate in history right now. So we're still very, very vulnerable right now. Um, I keep showing you this graph, and I'm hoping that people will take me seriously, but this is really where we're at right now. 50-day and the 200-day. Now, this doesn't it doesn't mean that all this can change. It can all change, but right now we need we need to have the RSP, which looks like this, looking like this. And for that to happen, the smaller stocks have to contribute, okay? We just don't have a lot of that right now. Yeah, we need to have a break out of that channel. We need to break above this channel right here. And QQQE needs to start playing along with this channel at least. But the market is not that beautiful right now. I'm telling you, it's just not. You may think it is, but it's not. But it needs to straighten out. The good news is we're still holding above the 200-day or about the 50-day moving average here, which is positive. And RSP, we're also doing the same thing. We're keying off of the 50-day. But you got to be really cautious here. We're still in this triangle. We need to get out of it. Okay. See, bond market is back to where it was, but this is positive data. And you could see here on the SPY is really liking this. Okay. Mags are on fire, which is great. Good, Beatrice. Good. Yeah, we just gave it yesterday. I haven't given it yet, SJ. I haven't given it yet. No, I don't. I don't look at the other ones. Okay, so as you guys can see here, I'm not that. I like the mags, but I'm still very, very nervous about the overall market and its vulnerability. You're going to be looking at the bond market today. The bond market is going to be calling its shot. By the way, gold is not really moving against us right now. This is not that bad for gold. And the bond market is stabilized, at least. Volatility is not moving higher, which is good. Just kind of doing its thing. Yeah, markets are fairly stable right now, but this is not a bad report. IWM, IWM is rocking and rolling. This is really good news for small caps. This is the best news for small caps possible. So I'm hoping that that'll give the market some overall support today. Because look, again, look with your own eyes. It's 108 stocks making 90-day highs. It's not great. There's 60 stocks making 50-day highs. Now look at 50-day lows. Remember there was like 10, 20, 87. Hey, that's a real number. More stocks breaking down than up. How about 20-week low? 37.52. Just not much. There's not much there. Not much there. But the downside is starting to get frisky. My downside today, I had no problem finding stocks. Speaking of which, let me give you the stocks that we're looking at right now, okay? Short side first. Remember, I don't screen for earnings, okay? I'm not screening for earnings. HubSpot. These are stocks that I like. Doesn't mean I'm ready to buy them or sell them right now, but these are the stocks that I like. This is equivalent to me walking down the street, seeing a pretty girl, and scheming to get to know her better and to meet her. I haven't met her yet. I don't even know if she speaks English. I don't even know if she's a woman. She looks good from 30 feet away. That's what this is, okay? That's what this is. These are stocks that look good from 10, 20, 30 feet away. Doesn't mean I'm going to marry them tomorrow or today. It just means that I'm really liking these stocks from a distance. Capiche? I explained that to yesterday to somebody. They were cracking up. I said, look, just because you like a girl that's walking across the street doesn't mean you're going to marry her. CRM. I really like CRM to the downside. Although today I would be cautious with CRM to the downside. I would be very cautious with downside today with this news. IoT. Hey, Blair. Good to see you. Good to see you, Blair. We're having some good session today. IoT. Adobe. Notice more stocks than usual on my short list. Wix. I think the president of this company lives in my subdivision, actually, of Wix, or used to live in my subdivision. I remember Morgan telling me. We have like a bunch of diehard golf players who live here. LKQ, Wanok I like. LKQ I like. Yeah, Russell, small caps are holding up really well right now. Really well right now. LKQ to the downside. Lulu. There you go, Ira. Capiche. Lulu still looking. Can't believe we got stopped out right here. I'll never forget that one. TNDM. I guess time to replace my memories on TNDM on Lulu. Tandem Diabetes. All these stocks look really good to look at to the short side. Now, let me give you long stocks. TME. Nice looking long stock. ALAB. INSM. Autodesk hasn't been on my list for a while. I'll take a look when I'm done in a second. That's an interesting one. SGI. This is an interesting one right here. Somni Group International. I think they make beds. Mattresses, excuse me. I think. Bank of Mellon. This one is looking good. Financials aren't looking beautiful, but this one's looking pretty beautiful. And BKE. This one, I like this trend. Buckle. It's got a really nice trend. And Main Street. And one more, BLK. Now, this is very expensive. This is an expensive stock, but I want to show you something. I want to show you something. Teach you guys something here. See that pattern right here? See that? You see this pattern right here? That's the highest probability low risk pattern that I know right there. An ascending triangle that's just breaking out right here. Doesn't have a lot of volume, but nothing has a lot of volume right now. But that's my favorite pattern. That's my highest probability pattern. Also, when I see this on a 5-minute chart on a pro trader dashboard, when you have the entry right here and it just builds up like this over here quickly and just keeps looking like it wants to break out, that's my favorite setup on a daily and the 5-minute chart. I love these setups right here. You're very low risk because look how close you are to the 8-day EMA and the trend line, and you're not overextended yet. So if you were to go right here to Bollinger Width, you would see that you're at the bottom. But I wanted to show you this. I know it's a very expensive stock, but I wanted you to see this pattern. This is my favorite setup of all time. Okay? All right, guys, well, let me give you a couple of links. Today will be an interesting day. I'm going to teach you a lot of stuff today that you did not know before. I'm going to give you some data that you did not know before, okay? In the VIP room, we're going to talk about what is institutional seasonality, how to confirm institutional seasonality, why relying on seasonality alone is the biggest mistake you'll ever make, how to combine seasonality with technical analysis, why seasonality is more important during earnings season, how seasonality can help you tilt the odds of time spreads. Yes, time spreads. Time spreads and seasonality. We've never talked about that before. I know how much you guys love my time spreads, my calendar spreads on earnings. I'm going to talk about them today. And top stocks to see whether they have or they do not have seasonality right now. Okay. I don't know if Raleigh is back today or if he's back tomorrow. I think he's back tomorrow. Maybe Art, maybe after the market opens, maybe for a debit spread, K for a debit spread when it's too expensive. But we'd have to make sure the bid and the offers are nice and tight. I'll take a look at it later. Okay. I'll actually highlight it right here. Maybe I'll give it to you guys as a bonus. All right. I will see you guys. Oh, before we leave, folks, if you don't mind, how about a few thumbs up? If you guys enjoyed this show, a few thumbs up, and here's my email address, roger@rogerscott.com. And here's the VIP room link. This is at noon today. And let me give you the link to Customer Service Live, the Cam and Gustavo show. Nothing good happens without Cam and Gustavo. Remember that. Okay. Please give us a couple of more thumbs up so we have over 300. That'll make Bob and me happy. And we'll go from there. Right now we have how many? We have 303. Yay! We got what we needed. You guys have a fantastic day. I'll see you. Me and Matt will see you at the office. Matt is back. I'll see you later, and hopefully we'll have some trades today. I'll see you guys later. Have a fantastic day. If there's something that you want me to add, if there's something I'm not doing, if there's something that irritates you, send me an email, okay? I'm trying to make this the best program ever. Bye, everybody. Have a fantastic day today. And let's be cautious today. Let's be very cautious. It's still summer. We have a lot of news coming out. We want to make sure the market reacts favorably to this. So let's take it step by step. Bye, everybody. Have a good day, everyone. And remember, folks, be careful. Don't do anything the first half hour. Offset positions only.